Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders with Marketing Huddle, and today we have with us Ty Crandall, who is the CEO of Credit Suite. Ty, welcome to the program.
Mike, thanks for having me. I'm excited to be here.
Hey, so in the industry that we are in, or the economy that we are in, access to capital is super important. I'm sure you would agree with that. What are you seeing in the industry right now as far as, need for capital, access for capital, and then where is Credit Suite meeting that need?
Well, there's obviously always a need for capital. When you look at any survey on this topic, and I think SBA is probably the most well-known entity that talks about this, the biggest reason for failure in business has to come down to lack of experience for the managers and the owners and lack of access to capital. And to me, those two are kind of one and the same, because when you have access to capital, you can kind of afford to make more mistakes. And I think Twitter is a great example of that. I saw a study the other day that said they could continue to lose money for 412 years before they run out, but wow. The average business, we don't have that luxury, right? So
yep.
The average business, an air conditioning unit goes out or a marketing campaign doesn't work out. Those little changes are enough to put somebody out of business. But most business owners know that. Anybody that's trying to bootstrap a business and trying to use the profits to pay themselves and grow the business knows for the need and importance of capital. But what we see is a big shift, and what we've seen over, the last going on 10 years since we really seen this change in the economy, to whereas conventional banks just really aren't the source of where business owners are now going to get access to money. It's now really shifted to what are referred to as alternative lenders, which are lenders that, focus on a strength of a business like cash flow, credit, or collateral, instead of everything, the business in its entirety, like SBA loans do. And as a result of that, we've seen, nearly 99% of funding coming from these alternative lenders and stop coming from the big banks. So I think that's the biggest shift is, everybody should just know that the capital's out there. There's plenty of it. There's probably more in the space now than there's ever been. The difference is it's just not coming from the big banks. It's coming from alternative lending sources.
Yeah, and I think during a few years back, all the banks were kind of getting defensive, saying we've got money to lend, we've got money to lend. Yeah, you do, but you've constricted the guidelines so much that not many companies can get it. So I think that's where, to your point, some of these creative alternative lenders come into play. And then would you factor in some like what would you say some of the best options for some of these creative lenders are? Or is that where then your service comes in to say, we can be the one-stop shop, we can educate you, guide you, here's some things to keep in mind? Because in reality, a business A, their needs are totally different than the borrowing needs of business B, C, or D.
Yeah, absolutely. And, what we look at is that sometimes banks are kind of put up there as the bad guy. And it's not really their fault. Conventional banks are, insured by the government. They have to be conservative in the risk. They have to lend, conservatively. And business lending is just risky. It's just inherently risky because so many businesses do go under. So as a result, they're usually working with SBA loans. Somebody has to meet SBA's requirements and banks' requirements. And then you've got, regulation like Dodd-Frank, which has tightened things up even more. So a lot of it just has to do with kind of the bureaucracy behind it, which restricts banks. And that's why these alternative lenders have said, well, wait a second, there's great opportunity here. And, high percentage of these loans do pay through. Let's make this money available. And that brings about a lot of different good options. It depends on the strength of the business. And that's kind of how we talk to customers is, what is your strength? It's usually one of three things. You have some kind of collateral or assets to offset a lender's risk. Or you have some kind of cash flow. You have consistent cash flow coming into your business, whether you could verify it through bank statements or tax returns, or maybe you have good personal credit. And any of those individual strengths opens up a lot of funding options. And in some cases, with even asset-based lending, you're getting rates lower than you get with SBA. You're talking about 1% to 3% rates on loans that SBA and conventional banks won't even do.
Yeah.
So there's a lot of money out there, and somebody definitely doesn't have to go through a source like us to obtain it. But the hardest part we found with obtaining it is you have to kind of know what your strength is and know the sources for that will lend you money based on that strength. And that's really where we come in. We want a marketplace where people can easily get access to capital, where they can go to one place and they can access all legitimate forms of business capital that are out there, not just one. And unfortunately, for some reason, that's just not the lending environment we're in. Most funding sources offer one or two different kind of unique funding programs. And even though you might not qualify there, you could easily qualify with, tens of thousands of other sources based on another strength. So that's really what our goal is to bring all capital into one place, to make it easy for somebody to come in and say, I want a business loan. We develop a business blueprint for them, or a finance blueprint. And then here's all the financing you can get now. And here's a strategy to continue to get more capital into the future. That's just the way that we see this industry changing, where it needs to shift to is easy access to capital for entrepreneurs without them needing to know everything about where to go specifically to get one individual or two individual types of loan programs.
Through that description, it made me think of something that I wonder how it would apply, how you would answer this. Isn't it true, or have you had a client before that has come to you and said, hey, I got XYZ type of loan, and maybe when you were talking to them, you discovered something and said, well, because of what you just told me here, this type of program or this kind of loan might have given you more whatever, flexibility or whatever the case is, and they just didn't know it because people don't know what they don't know. So potentially coming up, I love the concept of a blueprint. Give me just the roadmap, the blueprint, but maybe the opportunity cost of them spending their time and effort trying to muddle through something they're not an expert in takes them away from something that they need to be doing in their business anyway, and what they do settle in on could potentially be not the best choice long term anyway. So it's kind of like, what's their highest and best use of time, and it might not be stumbling through that process.
Well, absolutely. And, when I first got started in this space, I'd had about 12 years of financial experience, and I didn't know anything about business credit. When I realized what it was, I was astonished at how much experience I had in financial services and didn't know, knowing that the average business owner probably knew nothing about it. And the more I became seasoned in the industry and the more loan products that I also learned about, I realized it's an impossibility. I mean, the reality is, if anybody even knows anything about loan products out there as an entrepreneur, they typically know about less than 5% of the programs that are available. And unfortunately, on the other end, the biggest product that's become the most popular are called these cash advances. And it's really fast, easy money, but it's very high cost money. People are paying 25 to 45 or 50% more on the money they're borrowing. And in some cases, it actually is a good fit when the risk of the individual is very high and they have an intended use for that money where they can get a great return. But the payout on these is so high that so many brokers and so many people that are dealing with that loan program are pushing that loan program because they literally can get paid 10 points on a deal versus a private investor loan where somebody gets a 7.5% rate and the person only gets paid 0.5% for helping secure that kind of loan. So, and when you're dealing with one kind of loan product, that's kind of what you're dealing with. And, we've got loan products that we don't make a dime on, but it makes the best sense for our customers. And they're loan programs that pay a lot of fees, which, a lot of people only deal with those because they have such high payouts. So that's kind of the problem with not having a one place that deals with all different kind of loan programs, is that you're typically nowadays 7, 8 out of 10 times going to get pushed into a cash advance, which might be right for you, might not, but most people are going to push you in that direction because it's in their best interest. And like you said, the question becomes, is it in the business owner's best interest? And a lot of times it's not.
Do those cash advance type places report for, I know that they're not long-term, 5, 10, 15 years, but for as long as you have that loan and make payments on it, do they report something positively so that the business owner is developing some type of business credit history? Because I'm thinking a potential fit for those kind of loans would be for a new business owner that can't go traditional or even some of the creative ways because they just don't have a history at all. So maybe going through one or two of those kind of rounds of access to that capital might at least help them with a track record.
Oh, I think that makes sense. I think it's a great question. And some people will see that some companies report that they do report to the business credit reporting agencies. But here's the problem. I to date have not seen any cash advance products that actually report to the business credit reporting agencies as a trade line. They do report as what's called a UCC filing. And a UCC filing is just making a public record or declaration that this person has a loan with you. It just goes on your report to show that you have an outstanding loan. But it doesn't work as a trade line that's calculated into your score to help you benefit by having that loan. Your payment history.
Plus, how long do you typically have those loans?
It depends. I mean, cash advances, usually range anywhere from 3 months to 12 months on average. Now we're seeing them.
That's kind of what I was thinking. Is like even if you had it 6 to 9 months. Even if it did report, which is maybe highly unlikely, it's not the longevity doesn't do much for them, even if it was reporting in the first place.
No, well, it can. It absolutely can. I mean, unlike with consumer credit, with business credit, what matters most is payment history. So, when you look at consumer credit, the third biggest factor of your FICO score is the length of credit history. It has to do with two different aspects: the age of your oldest account and the average age of all your accounts. And that's the third biggest factor of your consumer FICO score. But with business credit scores, they're primarily driven by payment history. So if you get any account and you just pay as agreed, even a $100 limit account, then you are really helping to boost your score. So having any kind of payment history helps you on the business credit side. And like you said, if those did report, that would be of great benefit. But unfortunately, most of them don't report. And don't get me wrong, I don't want to talk bad about cash advances. They have their place. I mean, we've had clients come in that literally need to meet payroll in 24 hours, and they can get money that quick with this. We've got people that need to make a move to really, radically improve the revenue in their business, and this is the best fit. They definitely have their place, and they definitely are a good fit in a lot of cases. But there's a lot of other cases where somebody could get something like an alternative or an alternative SBA loan or a private investor money at literally a fifth or a tenth of the cost. And in those situations, unless they have connections with those type of investors, they typically still end up going the cash advance route.
Yeah, and those are good points. And guess what? It makes me think of kind of like the cliche phrases, ready, fire, aim, or you can't, get to a destination if you don't know where you're going, meaning that blueprint you mentioned, I think, is really key, because if you only know half the story from a client, you don't have enough tools and ammo to help them make the right decision. So getting all of that kind of analysis would help you make that good choice. So tell me a little bit about that blueprint. I think that is a pretty critical piece from day one, right?
I think so. I think there's two aspects to obtaining capital. I think there's, for one, what you can get right now. And then there's, for two, knowing what you can get if certain steps are taken. And that's really big on our strategy. The first thing we do with any entrepreneur is sit down and we actually explain, this is what lenders look for. This is what credit issuers look for. This is kind of kept secret. I mean, front-end bankers are not allowed to tell you this information. And to us, that seems crazy. Business owners should know, here's the rule book. Here's what you need to meet criteria-wise to qualify. And then that way it works kind of like a checklist that they can make sure that they meet that criteria to even start qualifying for initial business credit or business loans. And then, here's all the money you can qualify for now based on these 2, 3, 4, 5 products. But if you make these changes, then here's what you can qualify a year or 2 years from now. So, for example, in the business space, tax returns that show a profit are a really, really big deal. But we are often led to believe, that we want to show as little profit as possible to pay as little taxes as possible. So, we see a lot of business owners that literally just spend like money is going out of style at the end of the year just so they have no money to show so they don't have to pay taxes. But the adverse effect on that is that they lose, in a lot of cases, their ability to get 6 to 8% interest rate long-term loans. So by us at least saying, look, if you want to get to here, here's what you need to do. If you need help with your consumer credit, here's some sources that can help you. And, if you were to do this and show these kind of profits on your tax returns, here's the kind of financing you'd be able to get in a year. And if you do this and do this, then here's the outcome. And what we find is that when business owners have a plan, they have a path forward, as you said, they're very good at adhering to that path. It's just nobody's ever taught them these things. So without being taught those things, you just don't know what to do to get yourself in the best position for capital. So that's our strategy is here's all the money you can get now. Here's how to get it, helping them secure that, and then developing a long-term plan by helping build their business credit, by helping them understand how their bank credit score works, and then also mapping out the steps that they want to take if they want to get to other levels of capital, higher amounts of money, longer terms, lower rates.
Yeah, you mentioned business credit and building it, and it makes me think of, all the commercials you see on TV that, hey, this card gives you a free credit score every month. And so there's a need for that on the personal side, but what about on the business side? And also, I realize that I know I get letter or email or phone calls from the Dun & Bradstreet. People are looking at your business credit. You need to know what's in it. So is that a scam? Is that not necessary? If you know you haven't applied for anything and you don't need anything, does that even matter? So where does that come into play on that kind of, real-time knowing what your business credit is?
The most important thing to know is just as you have consumer credit and as important it is to your life, to getting cars and real estate and to be able to get credit cards, your business credit is equally as important to your business. It's linked to your EIN number, and the quality of that will determine if you get approved or denied for loans and credit for your business, the amount you get approved for, and the terms you pay. And as you build your business credit with not a lot of effort, just build it initially, then what happens is you start gaining the ability to leave your Social Security number off of credit applications and then pull your business credit and approve you without a personal credit check, without personal liability, and put the credit on your business credit reports, not your consumer credit report. So there's a ton of benefits. Now, loans still almost always require a personal credit check and guarantee unless you have really, really well-established business credit. It takes years to develop. But, some people can come in and get literally $10, $20, $30, $40, $50,000 credit cards based only on their business credit quality without even providing a Social Security number, without personal liability. So there's a lot of benefits to business credit outside of being able to obtain tons of credit with high limit accounts and out that liability and personal credit reporting or check. You also get the ability to obtain business loans. It really increases your ability to get business loans. Dun & Bradstreet has a good program called Credit Builder. They, in the past, they've kind of gone about it in a weird way, and it's resulted in a lot of class action lawsuits because, as you said, they're getting calls saying people are inquiring into your business credit, and that's not what really is happening. They're just following a script and calling everybody in their database. But they do allude to a good point. It does make sense for you to monitor and know what's on your business credit reports, but those calls don't actually stem from anybody ever really inquiring. They're making that same call to every single business in their database. And that being said, what their system does is with Credit Builder, they'll allow you to take like the software payment you make every month for your credit CRM software, and you can report that to D&B as a trade line. But what we find is that most people don't want to take accounts they have and put them on their credit report. They want to get new credit that reports on the credit report, and that's not what Credit Builder does. And Credit Builder only allows you to build D&B, whereas Equifax is what most business lenders look at, and Experian what most business credit issuers look at. So you really have to focus on those two equally, if not more, than what you may do with D&B.
Yeah, that's a really, really good point because it might make sense. A line of credit I'm currently paying for to be visible on Dun & Bradstreet. I've heard of Dun & Bradstreet before. That makes sense. But if that it's comparing apples to oranges, because if the bank is looking at Equifax, then D&B is not relevant. So that's a really good point. Hey, so wrapping up here, for people that would like to kind of get a mental checkbox and go, well, let me just see if I'm doing what I need to be doing, or in preparing for our upcoming needs, what's the best way that people can reach out to connect with your firm and kind of get an intro or some more information about how you guys operate?
They can go right to our main website, which is creditsuite.com/EIN. And if they go to creditsuite.com/EIN, we've got a great guide that maps out exactly what lenders are looking for and credit issuers are looking for, and also maps out the exact steps for somebody to build their business credit from having no credit to being able to get high limit store, fleet, and cash credit cards for their business.
Excellent. Well, Ty, thank you so much for your time today. I know I definitely learned a lot of really good, informative information, and thank you so much for coming on the show.
Mike, thanks for having me. I had a blast.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.